This is CryptoKernels. I am your host, Asa Kane. Since our last video on the sudden collapse of crypto bank Silvergate, we've uncovered additional vital information that we're going to share with you. But first, if you're watching this because you want to learn about crypto, because you want to understand crypto, and because you want to make money in crypto, click the like button right now. It's directly underneath our video in the middle. It helps to share with other people who are just like yourself. And also, if you have not already, make sure you hit the subscribe button, which is our icon located in the lower right hand corner of your video. It ensures that you don't miss out on any of our upcoming episodes. Now, this first article is from The Verse. It was published on March the 4th, yesterday, by Elizabeth Lapato, and it says, the crypto collapse has reached the real financial system. Silvergate's troubles may make it harder to get out of crypto and into dollars. Silvergate, one of the most important banks in crypto, is in big trouble, maybe existential trouble. Silvergate didn't start in crypto, it started in real estate. But in January of 2014, the bank jumped into Bitcoin, which was a volatile year. Bitcoin started the year at $770 and closed above $300 in December. Now, some of the companies that were being formed at the time, at the time, to provide services to this budding Bitcoin space. Many of them were struggling to find and maintain bank accounts, said Silvergate CEO Alan Lane in a June 2022 podcast. So that's where they started. The focus at the bank was institutions, other companies, some of which work with consumers, for instance, Genesis, the now bankrupt crypto lending subsidiary of DCG, was among Silvergate's early clients. The bank developed the Silvergate Exchange Network, which was a way for crypto institutions such as Coinbase, Gemini, and Kraken to transact in dollars 24/7. We've got all of them, Lane said, all the major ones. Also among Lane's clients, FTX. The more pressing problem is that the collapse of FTX spooked other Silvergate customers, resulting in an $8.1 billion run on the bank. 60% of its deposits that walked out the door in just one quarter. To give you some context, that's worse than what was experienced by the average bank to close in the Great Depression, 1929. Now, in its earnings filing, we found out that Silvergate's results last quarter were absolute dog shit, a $1 billion loss. Then on March 1st, Silvergate entered a surprise regulatory filing. It says that actually the quarterly results were even worse, and it's not clear the bank will be able to stay in business. What? In response, Coinbase, Galaxy Digital, Crypto.com, Circle, and Paxos have said that they will stop using Silvergate, as did other less notable clients. Tether, the controversial stablecoin that has had its own problems with banking, helpfully popped up to remind us it was not using them as well. The laundry list of customers helps to explain why Silvergate's woes are frightening. Very few banks will touch crypto because it's so risky, and most traditional banks don't let crypto clients transact in dollars 24/7. Now, if Silvergate goes out of business, it's going to push funds and market makers further offshore. Ava Labs president John Wu told Barron's, the issue is how easy it is to get into actual cash dollars, which in finance speak is called liquidity. Less liquidity makes transactions more difficult. Already, there is a broader gap between the price at which a trade is expected to go through and the actual price at which it executes, Wu said. So Silvergate's troubles are a problem for the entire crypto industry. Now, stable coins, Silvergate's SEN was an important on-ramp for the almighty dollar and the almighty euro into crypto. In 2022, Lane said all the regulated U.S. dollar-backed stablecoin issuers banked at Silvergate. But for stablecoins issued by Circle, Paxos, and Gemini, among others, the SEN was important for making and burning their tokens, which were issued when someone deposited $1 in their accounts. Now, Silvergate was a pass-through point for crypto. Stablecoins that are backed by dollars, at least theoretically, have cash or cash-like assets sitting in reserve somewhere. The reason Tether is controversial is that there are questions about the existence and value of that reserve. Silvergate's job was to create a token when someone put $1 into, say, USDC, and to burn a token when someone took $1 out. We are this critical piece of infrastructure where folks, as they're exiting the ecosystem and wanting to go to cash, those dollars pass through Silvergate, Lane said. Now you'll notice I'm saying was. That's because on March the 3rd, Silvergate announced it was suspending SEN effective immediately. Wow. The dollar side of the transaction meant that Silvergate's clients had to keep a bunch of cash on hand at the bank in order to pay each other and anyone who wanted to cash out. To make money here, Silvergate could do a few things. The safest is to buy like 1 month treasury bills at the Fed and call it a day. Now, this being finance, taking more risk also meant more profit. So Silvergate seems to have bought bonds. Now, wait a second here. Now, it's FTX again that sparked mass exodus into dollars, and Silvergate suddenly had to come up with a bunch of money. Now, unfortunately, that meant selling its bonds at a loss in order to pay its obligations. Okay? Ironically, the bonds were pretty safe. If its depositors had kept their money at Silvergate, they'd have matured with plenty of money to pay them back. Silvergate has another way of touching stable coins besides serving as the on-off ramp for their transactions. It bought assets from Facebook's doomed stablecoin attempt Libra, later named Diem, in January of last year. At the time, Silvergate said it would start making Diem available by the end of the year. The goal was a digital payments network. Of course, that was before FTX blew up, and the Enron guy said it was worse than Enron. Yeah. Lending against Bitcoin. One of the other services Silvergate offered was the ability to lend dollars against Bitcoin. Now, Silvergate said in January on its fourth quarter earnings call that all of our SEN leverage loans continue to perform as expected, with no losses or forced liquidities. Maybe these loans are fine. Silvergate doesn't appear to have done anything exceptionally risky elsewhere, but if you want to use your Bitcoin to take out a dollar loan, I think it just got harder. Now, real estate. Silvergate had a life before crypto. It was a tiny bank focused on real estate deals in Southern California. During that time, it never had more than $1 billion in deposits, according to the Financial Times, and Silvergate needed deposits. When Lane steered the company into crypto, its business ballooned. By 2021, Silvergate had more than $10 billion. The bank went public in 2019 at $12 a share and peaked at over $200 a share in 2021. Shares closed at $577 on March 3rd. Real estate became less and less of a focus because crypto was a rocket ship for the bank. But that real estate connection proved useful for Silvergate in 2022, though. In the last quarter of the year, Silvergate got at least $3.6 billion in funds from Federal Home Loan Banks, a 1930s era system that also originally dealt mortgages. To pay that off, Silvergate sold off more bonds. That is not ideal. And it is part of the reason Silvergate is in trouble. If you are a bank, you do not want to be pointing in the wrong direction because that becomes self-fulfilling, writes Bloomberg's Levin. And indeed, this is why many of Silvergate's major customers are spooked. Levine thinks that this may get some regulators interested in crypto banking. Bizarre transactions. For instance, Binance is supposedly independent arm Binance.us, and we talked about this a couple days ago, transferred more than $400 million to a trading firm called Merritt Peak, Reuters reported. That firm is managed by Binance CEO Xiaopeng Zhao. The CEO of Binance.us at the time, Catherine Coley, wrote to a Binance finance executive in late 2020 asking for an explanation for the transfers, calling them unexpected and saying no one mentioned them, Reuters wrote. Those transfers took place on Silvergate's special network, SEN. This is similar to one of the problems Silvergate faces around FTX. Alameda Research, the trading firm also owned by Sam Bankman-Fried, opened an account with Silvergate in 2018. Bankman-Fried admitted that he used Alameda funds for FTX funds, and we talked about that extensively as well. And if you haven't seen our video on that, check it out. A lot of companies that bank with Silvergate have been out here talking about how they have minimal exposure to it, which is historically not a good sign. But you know what? In this specific case, I'm inclined to believe them. First of all, just a fuckload of money has already left Silvergate. But second, Silvergate was a pass-through bank for crypto. It didn't hold on the reserves, and it didn't pay interest. The problem here is less that some exchange or stable coin is going to suffer a massive loss of customer money, and more that it is now even harder for crypto companies to get banking. The crypto industry desperately needs banks, but both of Silvergate's competitors, Metropolitan and Signature, were pulling away from the sector even before this debacle. Metropolitan said in January that it was getting all the way out of crypto, and in December, Signature said it was going to get rid of 8 to 10 billion in digital asset related funds. I don't know if Silvergate is going to come through this, but we'll see. Now, the second article is from MSN, and it was published yesterday as well by Leo Schwartz, and it says crypto's favorite bank is on the brink. What happens if Silvergate fails? There are a couple of specific things I want to share with you. Not at the top. Almost nothing you can do. Perceived by many traditional institutions as renegades, crypto companies often struggled to find banking partners. Some were understandable for self-fashioned disruptive firms, but they still needed traditional banking services for their payrolls and on-ramping customers and accounts to hold their treasuries. While many banks were skittish, Silvergate leapt at the opportunity, riding the wave of crypto's historic bull run. Its share price rose by more than 1,500% between November of 2019 and December of 2021. Now, its price began to teeter with the start of crypto's bear market following the collapse of Terra USD in May of 2022, and the bankruptcy of industry giant FTX exacerbated that. Crypto companies no longer had money to deposit with Silvergate. As Silva explained, deposits are the lifeblood of a bank. Once that starts to deteriorate and deteriorate that quickly, there's almost nothing you can do to stop the bleeding, he said. Now, with its share price tanking, Silvergate also could no longer rely on capital markets for funding. Results in its SEC filing on Wednesday, in which the bank said it was less than well capitalized. John Pompo, a former lawyer at the FDIC, analyst at the Federal Reserve Bank of Boston, and current partner at Gallatin Group, said banks can fail from reaching a critical capital level or an exodus of depositors. If Silvergate fails to meet certain capital requirements, it will receive a correction action notice from the FDIC and its chartering authority, or the California Department of Financial Protection and Innovation. Silvergate will then have 90 days to raise capital or sell itself to another bank. Wow. In the case of more immediate financial distress, the FDIC could take over at any time, generally on a Friday evening, to minimize disruption to the broader financial system. As of Saturday, Silvergate is still operating, although it announced on Friday night that it would discontinue the Silvergate Exchange Network, or SEN, a crypto payment solution between different firms, even as other deposit-related services remain operational. A shrinking universe. Crypto companies have already begun to flee from Silvergate, but the downstream effects could just be beginning. As a result, banking will become more expensive for crypto companies as they explore other options, from credit unions to other types of financial technology companies. It shrinks the universe of potential partners very quickly. Some in the crypto industry have pointed fingers at banking regulators, who have issued a number of statements in the wake of FTX's collapse, warning of liquidity risk related to crypto. Nick Carter, a crypto-focused venture investor, described a seemingly coordinated effort of different federal regulators to deny banking services to crypto firms as Operation Choke Point 2.0, a term that's since caught on. Operation Choke Point 2.0. Silvergate's failure, Silva added, has much more to do with FTX than regulators. There's just a lot of problems that banks see without a lot of reward, he told Fortune. Even the other U.S. bank that's established itself as crypto-friendly, Signature, has displayed more resistance toward working with the industry. In December, it announced that it would shrink its deposits tied to cryptocurrencies. We are not just a crypto bank, and we want that to come across loud and clear. CEO Joe DiPaolo said at an investor conference, despite the traditional financial sector's pullback, they still see some optimism. Well, we'll see. We'll see. Now, right here, I wanted to show you Silvergate's website again. I showed it to you in our last episode. One difference right here at the top, as you see here, effective immediately, Silvergate Bank has made a risk-based decision to discontinue the SEN network. All other deposits will remain intact. Wow, this was not on there 2 days ago. You can go back and look at the video and see. This is just the beginning, apparently, so we'll see what happens. Now, we can't help with that, but one thing we can do right now, for most of you that do not have one of these, get yourself your own cold storage wallet. Do not leave your money on Coinbase, Crypto.com, Binance, or any other exchange. Take it off there and put it in your possession. Ledger is one of the leading worldwide manufacturers of crypto cold storage wallets. They're based in France. They ship worldwide. You take your crypto off the exchange and you put it onto your wallet. That way no one can steal it from you, ever. No Do Kwon, no Sam Bankman-Fried, no one. Okay? You can also manage over 5,500 digital assets on your wallet, including now NFTs. Okay? Do yourself the best thing you can do for yourself and get your own cold storage wallet. All right. In addition to that, use our links to Coinbase and Crypto.com to get up to $65 in crypto you can use for whatever you want. Also, grab your CryptoKernels merch. And if this video has been of value to you, you can contribute to the channel with any ERC20 token or by sending a super thanks. And just delve into our library. There are 98 videos, all that are extremely valuable and all that have a lot of knowledge and education in them to make you more of a better investor. And also check out our brand new video called Undead Blocks about the first RPG crypto zombie shooter game. And until next time, get in there and make it happen.